All right, let's talk crypto, because right now the market is sending some seriously mixed signals. On one hand, we've got all this amazing, positive, long-term news piling up. But then you look at the prices and, well, they've been dropping. It's confusing, right? So let's try and make sense of it all.
And that brings us to the big question, doesn't it? Prices are down, so why do so many experts still sound so incredibly bullish? It feels like there's this massive tug of war happening between two powerful opposing forces. So what is really going on here?
I mean, just look at the last week to see what I'm talking about. Yeah, Bitcoin kind of held its ground, but some of the other big players, Ethereum and Solana, saw some pretty nasty double-digit drops. So on the surface, you'd be right to think things look shaky. But that's really only half the picture. Let's flip the script and dive into the powerful, long-term trends that are driving all this optimism. This is the bull case, the reason for all the excitement. And really, the biggest story here, the absolute game changer, is exchange-traded funds, or ETFs. This is all about big, institutional money finally pouring in. It's a fundamental shift, you know? It just makes it so much easier and safer for the big players to get into the game. And don't just take my word for it. A top analyst over at Bloomberg put it pretty bluntly. Without these ETFs, Bitcoin's price would probably be less than half of what it is today. Think about that. Less than half. The before and after picture is just stark. Before a financial giant like BlackRock even filed for its ETF, Bitcoin was hanging out around $30,000. Today, we're looking at something closer to $113,000. That's a massive shift, and it's all being driven by that institutional interest. Yeah, you heard that right. That's a 350% increase since this whole trend really kicked off. It just goes to show you the incredible power of making crypto accessible to mainstream, big money investors. Okay, so besides the ETFs, another huge part of the bull argument is Bitcoin's built-in scarcity. This is where you hear about the stock-to-flow model. See, unlike regular currencies that governments can just print more of, Bitcoin has a fixed, finite supply. That makes it a lot more like digital gold. And this model, well, it makes some pretty staggering predictions. We're talking about a projected average price of $500,000 for this cycle. And even its low-end prediction is $250,000. Wow. And the third big driver here is something called global M2. It sounds complicated, but it's really just the total amount of money floating around in the world's economy. And what's interesting is that historically, Bitcoin's price has been super sensitive to this. In fact, there's a clear pattern. When the global money supply goes up, Bitcoin's price tends to follow suit, usually with about a 2 to 3 month delay. It's a lagged effect, but it's been surprisingly consistent. Okay, so with all that good news, why the heck have prices been dropping lately? And that brings us to the other side of the story. It's time for a short-term reality check. So a huge driver of the recent volatility comes down to this one eye-watering number. We're talking about nearly $2 billion in high-risk bets, made with borrowed money, mind you, that got totally wiped out. They call this a liquidation, and what it does is trigger this forced, automated cascade of selling that can send prices just tumbling down in a matter of minutes. And it's not just those liquidations. The market is facing a bunch of other headwinds right now. You've got real fears of a U.S. government shutdown, just general economic uncertainty all around, and, well, the simple fact that September is almost always a weak month for the markets. All of that together creates this climate of caution. So this is really the core conflict, the big tug of war. On one side, you have these incredibly powerful long-term forces, like all that ETF money pushing things up. And on the other side, you have all these short-term fears pulling the market right back down. So after all that, what's the key takeaway? What should you remember? It's that we're in a market that is absolutely defined by tension right now. To put it as simply as possible, the big story in crypto today is a battle. It's the long-term vision of institutional adoption going head-to-head with the short-term fears about the global economy. So what does this all mean for you? Well, it means the foundation for crypto is getting stronger, for sure, thanks to all that big money, but you should also expect the ride to stay bumpy. This market is probably going to remain pretty choppy as it reacts to every new headline. And that leaves us with the big final question, doesn't it? As these two massive forces, the institutional bulls and the macroeconomic bears, collide, which one is ultimately going to define crypto's next chapter?